okay, we can actually build a ZK rollup on Bitcoin because now people are using ordinals, but they are not so great, not so efficient for Bitcoin, but also user perspective, it is very poor. So our idea was, okay, we can actually use these primitives and zero knowledge technology to build more programmability into Bitcoin without changing Bitcoin itself.
Hi Orkun, how are you?
Hey Jed, thank you. I'm doing well. How are you?
Good. Thanks for joining the show. Can you please start by presenting yourself and your company?
Yeah, of course. My name is Orkun. I'm co-founder and CEO of Citrea. And Citrea is a new project that we are building on Bitcoin. It is the first ZK rollup on Bitcoin. And ZK rollup is basically a scaling solution that's built on top of another blockchain. In our case, it's Bitcoin. So the goal of Citrea is to bring more features and usability to Bitcoin without giving up its security and decentralization. So that we can allow people to both hold their own keys, but also do more than they can do right now on Bitcoin main chain, such as like lending, borrowing Bitcoin, having Bitcoin-backed stable coins, Bitcoin-backed prediction markets. So a bunch of other things that you need smart contracts for. Those can be built on Citrea while using Bitcoin security.
Actually, it's a very interesting topic because there's a lot of discussion about Bitcoin itself.
Yeah.
But what's going to be built on Bitcoin is something that I find very rare and not a lot talked about. So I'm looking forward for this discussion. But before we go into Citrea, can you tell me a little bit about your Bitcoin journey from a personal perspective until you started Citrea?
Yeah, sure. So actually, the first time I met Bitcoin was around like 2017. My brother was just telling me, "Hey, look, there's something called Bitcoin. We should buy it." He's my little brother, and I was just ignoring him because I was thinking like it's some sort of internet money that's not real. We shouldn't spend money on it. But after that year, I started college as a computer engineer. I had backgrounds in software engineering, but I never looked into Bitcoin back in those days. But after I started college, I got more and more interested because I had some freelance jobs on smart contracts platforms such as Ethereum. And then I started to like basically be curious about like what's happening there, like how people can actually do payments without using banks and without going through any centralized infrastructure. And I keep reading more and more, starting with Bitcoin white paper. And I actually realized, okay, this technology is something real. It's not like an imaginary money. There's actual a backing of that money and a decentralized system that people can actually hold their own money, unlike banks. And after that point, I just developed myself into data engineering, especially about smart contracts and blockchain core engineering. So after 2020, late 2020, I just started developing smart contracts for various different platforms. At the same time, I was following almost all the discussions around Bitcoin and Ethereum mainly. And in 2022, my three other co-founders and I wanted to build our own company to build different products in blockchain industry. Almost all of us were computer engineers, so we did know about the technology, how it works, and decided, okay, we can actually build products here instead of building products around in different companies. And then we got together, started working on different kind of tech stacks. Initially, we built a couple privacy projects to allow people to send money privately without recording into a public blockchain. It can go through private pools, especially using ZK technology. That's how we met about this ZK technology and the mathematics behind it. And after that, I think together with ordinals, we got more and more interested in Bitcoin because previously we think that, okay, Bitcoin is cool as a money, but actually what you can build on Bitcoin is extremely limited. But after ordinals, it's actually like we decided to basically just cut into the script, Bitcoin script, and decide maybe we can build something in here. And then we actually discovered building, okay, we said like, okay, we can actually build a ZK rollup on Bitcoin because now people are using ordinals, but they're not so great. They're just like not so efficient for Bitcoin, but also user perspective, it is very poor. So our idea was, okay, we can actually use these primitives and zero knowledge technology to build more programmability into Bitcoin without changing Bitcoin itself. And then that's basically the journey of Citrea. For the last 1.5 years, we've been building Citrea. And right now we are running on Bitcoin testnet. Hopefully in a couple of months, we will release our mainnet version. But right now it is still work in progress. And just we are experimenting with developers and early testers for the product.
Okay, you you flooded me with a lot of information, and maybe it's a little bit overwhelming. So I'm gonna start like back at the beginning. Like usually, what I have noticed is people discover Bitcoin, and when they are like developers, they tend to go to Ethereum because you can build smart contracts, and it was designed to build. Ethereum was designed to build the smart contracts, and they start like developing all these layer twos and smart contracts solutions and DeFi, etc. on Ethereum, and then on alternatives like Solana and stuff, other technologies that are more adapted to smart contracts. Why did you go the other way around? Basically, it's very rare to go from Ethereum to Bitcoin.
Yeah, because since like the initial days of my career, I knew that like Bitcoin is the only real money among all of these blockchains. Like most of them, as platforms, enable smart contracts, but the assets that you use there is not like Bitcoin. Bitcoin has like probably the best distribution among all the crypto assets because it's fair launch, it's proof of work, it is more censorship resistant, it is more decentralized. But the thing with other blockchains is they are not like Bitcoin, and developers are forced to build smart contracts on that blockchains. And we wanted to change that because we knew Bitcoin as the asset is important, but Bitcoin network is also important because it is secure and decentralized. So we said, okay, why people are building on Ethereum and other smart contract chains? Because most of in the case, they cannot build those features on Bitcoin. And our goal was, what if we can build some platform so that people can actually build all of these features on Bitcoin so that they can have access to the best money in the world, BTC. And that was basically the start of it. We could just choose the easier way and build something on Ethereum. But eventually someone need to solve this problem of Bitcoin, which if you want to use your Bitcoin, you have to just like, there are two options. You have to go to some other chain and use some other assets so that you have to sell your Bitcoin or buy some other asset that you don't want to. And the second thing is you have to go to custodians to use your Bitcoin, such as like in the previous cycle, a lot of these companies actually failed. And their main thing was getting customers Bitcoin and lending them stable coins. And those businesses basically failed because they were custodial and centralized controlled. And our goal was like, you don't have to go to another blockchain or you don't have to go to custodians. We can build this smart contract platform so that people can actually use the smart contracts without giving up their ownership on their Bitcoin.
Okay, but before going into like what you built, I wanted just to challenge a little bit what you said that the real money is Bitcoin. I mean, I do agree, but just for the sake of the debate, if you hear the Ethereum guys, they explain that it's ultrasound money. So like they claim that it's even better money than Bitcoin. Why did you drop this narrative and you choose the Bitcoin narrative?
Yeah, I think right now, like the Ethereum's main advantage is the technological innovation they have. And they definitely have like much better technological innovation than Bitcoin. But the problem with that is like the launch of Ethereum is very different than the launch of Bitcoin, where there was a fair launch, there was a proof of work still going. And now Ethereum, I think their narratives are a bit mixed. Like ultrasound money was a thing like 3 years ago. But right now, if you ask the Ethereum people, they will say ultrasound money was a mistake. We are a smart contract platform. We don't target to be a money because there are a couple properties that you have to be if you want to be money, such as store of value, medium of exchange, unit of account. And right now, Bitcoin is, I think, proved itself as store of value. And the next two things coming is medium of exchange and unit of account. And those features can only be satisfied if you can do something with your Bitcoin, right? If you just sit your Bitcoin in your wallet or in your ETF, then it's becoming a digital gold, which is not a money. Gold is not a money, but we want Bitcoin to be a money because this is how Satoshi designed Bitcoin as a peer-to-peer electronic cash. So in order to enable that vision, we have to build this. And I think Ethereum is something else. It's a great thing as a technology, and it is basically the asset that enables you to use that technology. But our vision here is much different. Bitcoin is already a very good candidate for being a money, and we just want to have the same features as Ethereum, but use Bitcoin, because can't we just get both of the worlds, like best of the worlds? So that was simply how we got into this, using Bitcoin for all of these instead of ETH and other assets.
Okay, so that's why you transitioned to Bitcoin. You took the main feature, which is store of value, and you're trying to add the other features that are medium of exchange and unit of account. And you mentioned the ordinals. Mm-hmm. So from my understanding, the ordinals are ways of reading the block or writing the block.
Yeah.
In a way, you can read them with a particular protocol called ordinals, and it allows you to identify, like, this is these Satoshis, basically, which has like pieces of Bitcoin, are linked to this inscription, and therefore they are recognized as ordinals. It looks a little bit like the NFTs of the blockchain crypto stuff that you see on Ethereum and other. But what's your ZK? I'm not familiar with that. And why don't you build the smart contracts with the ordinals? How does this technology works, and what's the limitation of ordinals, and why you need like to develop something new to allow to have more things?
Yeah. So with ordinals, like you said, it's like Bitcoin itself is actually a bit technical, but it's a publishing network, right? Whatever blocks that miners mine is published all over the nodes. I think around right now more than 50,000 nodes are online that we can detect. And this means that all of these nodes see the same thing. And that's a very unique feature that you have right now. This means you can publish something and everyone arriving consensus on what's published. So Ordinals is using that primitive. And instead of publishing Bitcoin transactions, they publish data. This can be images or other things like videos, whatever, just like NFTs, so that they basically putting that data into Bitcoin blocks so that all of these Bitcoin nodes can see the same data. And that's valuable because that's how you get Bitcoin security. Bitcoin security comes from that. Like all of the nodes see the same thing. That's how you define the security in the distributed system. And in Ordinal's case, they use that to trick the blockchain to put some images. And in our case, what we wanted to do is to use the same property of Bitcoin to broadcast smart contract transactions to all of the Bitcoin nodes. So we can just do it by basically using the ordinals primitive and dump basically all the data into ordinals and then broadcast. But this is not so efficient because this means that you have to just put all of these transaction data as ordinals, and it becomes very data heavy. So we could just publish all like 4 megabyte blocks, full blocks, all of the network, and it's very overwhelming. So the ZK is like, it means zero knowledge technology. And zero knowledge means that we have a process and we have inputs to that process or function, whatever we call. And that function executes and outputs some data. The thing with zero knowledge is you can mathematically prove that function executed correctly without knowing what are the inputs or what are the function. So it's basically a mathematical attestation to the correctness of execution. So we use this trick, and our function is basically the smart contracts. So what happens is people send their transaction onto this ZK rollup, and that transactions run into that ZK function and output some data, which is very smaller than the input data, but it is still verifiable. And then we put that data, just like ordinals, into Bitcoin blockchain. So it's using the same trick to distribute that data over all the Bitcoin nodes, but it makes it much more efficient. And it also makes it much more programmable because we can just put all the logic into ZK function, and Bitcoin doesn't need to know what's happening on that layer. It just knows, okay, this is a mathematical attestation data to something that only users care, so that Bitcoin is not overwhelmed with that data and all of these functions.
Okay, so basically Just summing it up for my understanding. So basically, Bitcoin, the Bitcoin network is a kind of ledger where
Yes.
every transaction is recorded, and it's like a public database where you can see like all the wallets, and each transfer is recorded on the database. Then the ordinals came and said, okay, but this transaction, if you write it in that way, it means that this is a Satoshi or a unit of account that has also an additional information that comes on top of it. And what you're doing is that you're inputting a function, ZK is like zero knowledge function, that comes and reads these Satoshis, but in a different manner, because you have this function that sits on top of the transactions and the inscriptions on the ledger. But this function, the ZK function, isn't it centralized? Like it's not on a centralized function, and therefore you lose the decentralization aspect of it?
Yeah, the thing about this function is, yeah, it's run by, let's say, currently a single computer. That function is right now centralized. But the thing about this function is it is already verifiable. So whatever this function outputs, it's a proof of something. And everyone can verify that proof. So no matter how centralized it is still fully verifiable. So this means that even though this function is run by a single computer, as long as there's a valid proof output that function, and this means no one's fund can be stolen ever, because the function mathematically attests that all the rules executed correctly. So yeah, it's, let's say, more centralized than Bitcoin itself, but it has the
It's
same
more
verifiable.
centralized also than Ethereum smart contract, no?
Yeah, of course, it's more centralized than any other blockchain, but it is
Okay.
as verifiable as Bitcoin.
Okay.
So
Okay,
the
I see.
security doesn't change, but only who executes this function change.
Okay, I see. So the way forward, basically, to have smart contracts on Bitcoin is to have different companies operating different ZK functions that allow smart contracts, and each one will operate differently, but they will all inscribe in the Bitcoin ledger, basically.
Yeah, actually, our infrastructure is generic. So people don't have to build all of these from scratch. They can just get their, let's say, Ethereum smart contracts and deploy into our platform. And it's automatically embedded into that ZK function. So all of this heavy infrastructure is only built by and run by us so that others don't have to. We have a platform that basically allows all of the Ethereum smart contracts to be run exactly the same without needing to change. So right now, let's say there's a decentralized exchange on Ethereum. It's a smart contract. You can just get that smart contract, upload to Citrea, and people do transaction on that smart contract. And all of these transactions run into the ZK function and inscribed on Bitcoin, so that all of the developers, they don't have to worry about this technology. The users, they don't have to worry about how hard this technology is to use. We are just building the infrastructure to mimic the same developer and user behavior on Ethereum, but everything happens on Bitcoin.
Okay. But that's different from the ordinals function, because the ordinals have, like, it's a protocol that reads, so anybody can download the protocol and read the Bitcoin ledger and see where are the ordinals and stuff
Yep,
like that.
they
Here it's
can
like
still do that.
we have to ask you as a company
No, it's
to.
not, because we are inscribing that proofs into Bitcoin, so that just like running this ordinals indexer, we
Okay.
have
So
also like our
so
open
you can
source
read the
code
smart
base.
contract
Yes.
without having to interact with Citria, basically.
Yes, exactly. If you have a Bitcoin node, our software is
Okay.
fully open source. You can just download and ask everything you want or write everything you want. You don't have to ask to us.
Okay. And how do you make money?
Yeah, by basically running that infrastructure. So there are a couple components in that infrastructure. Users send the transaction and basically pays like a fee, right? And that fee has three components. One is the proving cost, like the ZK function is not easy to execute. It requires heavy computers, and that's one cost. And the second cost is we inscribe those proofs into Bitcoin, right? So we pay Bitcoin miners. And this is the majority of the cost. User transaction fees, 90% of them goes to Bitcoin miners. So it's actually a very Bitcoin aligned protocol because majority of the fees goes to the miners. And some part of the fee go to the proving cost, and there's a small part of the fee which is basically our revenue for running that infrastructure.
Okay, and where are you based?
I'm based in Istanbul, Turkey, but we are a distributed company.
Okay, and how is it to launch your company in Turkey? Like, are there any Turkish elements that made you go that way or that direction, or you were just part of the global movement?
Yeah, there is this first, like the story part of thing, but the other thing is obviously the talent in Turkey. Like Turkey has very bright engineers, researchers, which is not like probably very familiar with the smart contracts or Bitcoin or blockchains. Like Turkey is for entrepreneurs, it's already like succeeded for gaming, for mobile apps, but for blockchain, it's still lagging behind. And we are one of the leading companies in that blockchain industry, basically. There are a lot of engineers and researchers coming to our way, learning the blockchain here and implementing different protocols, starting with Citrea. That's the talent part of like the good part of being Turkey. And there's also the story part of how we got here. All my co-founders, we are Turkish. And the last 10 years in Turkey was not that easy in terms of economical crisis and a bunch of other things. So the Turkish lira lost a lot of value compared to the USD or Bitcoin or any other asset in the world. And the main reason behind what's happening is that money, the Turkish lira, is controlled by a centralized entity, right? The central bank. They have their own interests, and those interests are very different than people's interests. But this is not only valid for Turkish lira, this is valid for like all the centralized issued assets. Even USD, the US government versus the US people, they have different interests. So the monetary policy doesn't always align with users, like the people's interests. And in here, the same thing happened. And people started using more and more Bitcoin and other assets, especially USDT, because there are also some capital control rules that targets holding USD in your bank account. So most people use BTC and USDT as their store of value in their crypto accounts. But over the years, what we realized is most people hold their Bitcoin and USDT in exchanges. There are a couple popular exchanges, very early exchange, but maybe I think there are 100 exchanges in Turkey, right? And some of them are basically scammers, or like they collapse, they run away with user funds. And
there was a big story of a big collapse of an exchange in Turkey, if I remember correctly, right?
I think it happens every 2 years. Yeah, just like any exchange in the world, Turkish exchange, they are not different because the user funds are always controlled by a central party, which is the exchange. And even though they're very good at their job, they can get hacked or they can get, let's say, theft, like somehow in physical world as well. So it's very risky to hold user funds in custody. And that's also like the one starting point that's why we decided to build Citrea instead of building a centralized Bitcoin institution. Because the thing here we know is as long as people don't hold their own keys, they're vulnerable to different attacks. So this is valid for exchange. If you hold your money on exchange, you are fully trusting exchange and you are not actually holding Bitcoin. The exchange holds Bitcoin and exchange promises you that they hold your own Bitcoin in their own wallet. But this may not be always the truth. So what we are building is just enables non-custodial usage of Bitcoin. You hold your own seed phrase, own private key, and everything happens in self-custody.
Yeah, about like holding your own coins and your own Bitcoins, I find it quite challenging, the not your keys, not your coins, because when it's a couple of $1,000s, it's fine. When it becomes like hundreds of thousands of millions, you're much safer with an ETF, for example, where you can, you know that there is a regulated custodian, there is a regulated fund, there is an insurance on your fund, and so on. So you feel like more comfortable. It's like putting your gold under your bed or in a safe. What do you think about that?
I think like all of the US banks were also insured when there's a crisis in US like 15 years ago, right? And all of the Turkish banks, they're highly regulated, but the Turkish lira still loses its value, and there's like strict capital control in Turkey, even though it's not legally forced. So as long as you trust someone, if things are good, things are good. But if the things are going bad, then there's a high chance that you don't get your money, even though it's deregulated. Because the governments and the centralized institutions, they just care about running the system as long as possible. So in some cases, if there's, let's say, a failure in custody of ETF, the government may say, okay, this happened one time. I will ensure this won't happen again, but I won't give you any assurance about your funds. And they can just like vote themselves and decide to do that. And you cannot say anything about that decision because it's centralized controlled. I definitely agree. The self-custody is hard. That's also one thing that we plan to change, and we can change, because on Bitcoin, you lack of a lot of things, right? You don't have covenants, so you cannot build vaults. And the multisigs are very hard to build. And you have to, let's say, have your own seed phrase, which is also hard to store, even though you just write it down to the paper. But in here, we bring the smart contract capability, which means that we bring the smart account features on Ethereum to Bitcoin as well. So the smart account basically means putting your money into a smart contract, but that smart contract has a bunch of rules written into it so that you can say that, okay, this key is controlling that smart account, but if the key triggers, let's say, a Bitcoin transfer, which worth more than $10,000, then it needs approval from two other keys. And if it requires more like thresholds, then it needs to have 5 more signers in that transaction. So you can enforce all of these logic into smart contracts on Ethereum. And we are just moving the same infrastructure to do the same thing on Bitcoin by using Citrea. So we also plan to make self-custody much more easier than holding that Bitcoin natively on the L1. But yes, still it's challenging. It's not as easy as buying an ETF from an exchange, but security-wise, I strongly believe it's much greater than holding any custodial Bitcoin.
I've never heard about smart account. It's an interesting concept, actually.
Yeah, for sure, because it makes people's life easier. And these conditions that I listed as just like whatever you imagine, you can build it, because you can program everything that you want and you can enforce any logic that you want. It can be recovery, account recovery. If you lose your keys, you can recover from, let's say, 2 of your 3 friends, or you can enforce different limits, daily limits, monthly limits, yearly limits, inheritance frameworks. All of these can be built into smart contracts, and you can put your money into smart contracts. So as long as you haven't written any, let's say, buggy code, then everything is secure. And it's much easier than holding your seed phrase on the L1 and just pray and no one steals your money.
Yeah, and I mean, I like to look at Turkey as a very good illustration when I talk about Bitcoin, about when money goes wrong, because money is wrong everywhere because of inflation, but in Turkey is like people can relate to it because the moves are stronger, basically.
Yeah.
So the Bitcoin of Turkey, I would say, is the USD, and the Turkish lira of the US is the US dollar compared to Bitcoin. So that's Turkish lira USD versus Bitcoin USD are like quite similar.
Yeah.
And you can see also in Turkey how like when there are like two forces that are struggling between maintaining the purchasing power of the lira, but at the same way depreciating it to keep growth, and therefore you have like this effect that there's no solution, but you can see it like operating everywhere in the world. But in Turkey, it's much more visible because the moves are much more stronger and the rates are higher and the falls are bigger, right?
And it has like this rolling effect. Like it starts very slowly, and then once it gets bigger, there's no way to stop it until you just blow everything up, right? So it's going like this, and every year it's accelerating. We can actually feel it. The inflation rate is more than 100%, even though it's not announced in that way. Basically, you can see the rents and basically grocery shopping. Everything went more than 2x in the last year, for example. And Bitcoin right now is like the most, let's say, promised like the store of value in Turkey. If people, like most people know about cryptocurrencies, and majority of them know about Bitcoin. but most of them still hold USD because they don't, let's say, trust Bitcoin. But over the years, Bitcoin will become much more stable compared to the other local currencies. Even though it's increasing, it will be a steady increase so that it becomes much less volatile, and people will hopefully shift to Bitcoin than USDT or USDC, which is still a centralized controlled asset.
Yeah, yeah. Okay, it was an interesting discussion. Unfortunately, we have to wrap it. Do you have any other things you need to add? Maybe where we can find you online and share your links and stuff?
Yeah, so citrea.xyz is our main webpage. So if you go there, you can find everything around our socials, around our blog, documentation. Our documentation is like extremely technical, and if you go deep, you will probably understand most of the technical features of we are building. Everything we built is open source. We really care about it because of auditability, because of the trust. And on our socials, we also share a lot of updates about our tech stack, about the upcoming products that's built on top of Citrea. So you can find them there. We are right now on testnet. You unfortunately cannot use it with your real money, your real Bitcoin. But hopefully in a couple of months, we will be on mainnet so that you can also experiment and use different features that we offer.
And financing-wise, as an investor, are you open to more investor money, or have you raised money, or you're doing everything on your own?
Yeah, we recently announced our Series A led by Founders Fund. Right now, we don't raise any funds, but yeah, we announced it. You can also find that announcement on our Twitter.
Okay, Founders Fund. Wow, that's a very nice signature. It means you're on to something.
Yeah, for sure.
Okay, good luck, and thanks a lot for sharing with us all this information.
Of course, thank you for inviting me. It was great to chat.
Take care.
Bye-bye.